Prices are up, and it's not good. I can tell you that until this conflict gets resolved, which you get mixed signals. This is from the administration, who is clearly trying to run the narrative, banning our money supply because the Fed has been restricted.
I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop. Hey, it's KP coming to you live from Corona, California. 10:30 at night here on a Monday. Finally got through all the emails. Going to crank out this video and help us navigate all the craziness before Easter weekend. Big news week, actually. It's jobs week. That does mean something. There is a dual mandate for the Fed, even though it's really a tri-mandate if you count long-term stable interest rates, inflation, and maximum employment. And there's just a lot to navigate, and I'll help set the table again for the week. But first, Nick Robertson was a buddy of mine. When I first really started traveling, I moved here about 10 years ago. Just a good dude, worked at some AMCs, and recently passed. And the Crispin blog did a good job of highlighting, us losing an industry veteran. He leaves behind a daughter and a son, and lost his battle with cancer, unfortunately. So, you know what I always say? F cancer. There's a link in the Crispin blog to donate for those that knew him. I heard about it first through Kimber White's post on Facebook, and he was a really good friend, big heart, hung out a lot with him on the road when he was on the road. And he sent me about 1 million funny memes over the years, and they kind of stopped in January, and I should have reached out, and I didn't, and I feel bad about that. So reach out to someone you haven't heard from in a while. You never know what battle they're facing. Speaking of battles, everyone wants to talk about Iran and how that's going to set the price of oil and give us an inflation shock, and we're going to have 7% interest rates and a 5% 10-year Treasury, and the Fed's going to hike rates now. Anyone who's typing that, just stop following them, because it's not true. So, of course, I don't know, but, the Fed met 2 weeks ago, and they meet again in 4 weeks. They take a break every 6 weeks, and they said how they look at oil shocks as kind of a one-time pass-through, with inflation being transitory, that dreaded word, just like the tariffs, which have turned into a big nothing burger. Although last April, the stock market was really uncertain. I am not a financial advisor. I'm not responsible for your losses, only your profits. But the setup here is for another incredible wealth-generating opportunity in the stock market. And so I'll get into that in just a second. But yes, oil prices are up, and it's not good. I can tell you that until this conflict gets resolved, which you get mixed signals. This is from the administration, who is clearly trying to run the narrative. I heard late today that the 15-point plan that they proposed to Iran, whoever they're talking to, although my favorite meme was, Trump administration upset to find out they were talking to a Pakistani scammer all along, and not the Iranian regime. But the Tiger Woods memes are even better. But I will say, whoever they're talking to through intermediaries or whatever, this thing's going to end. It's not going to last forever, and we all know that. And so I'm not trying to encourage people to catch a falling knife and call the bottom in the stock market. But trees don't grow to the sky. And, the greatest thing for rising oil prices is rising oil prices. You're already seeing all the posts on LinkedIn, canceling trips, doing more staycations, not doing flights. People aren't going to spend money on more expensive gas if they don't have to. And it does obviously have, discretionary income for other things could get hurt. But the GDP would pop if our trade balance goes up because, we're not importing Iranian oil. Here in California, I listened to Louis Navalier from Platinum, the Platinum Market Guide, or Platinum Growth Investor, excuse me. California has a lot of oil that we actually import from, India and South Korea, that gets their oil from, the Strait of Hormuz. And there's like a special blend of gas, of course, in California, and all the more reason to have an electric vehicle, FYI. So we're going to face it here, and our gas prices are going up much larger. Generally, the United States is pretty insulated, but if other countries around the world not just face supply shocks, but then actual shortages, like I read somewhere that the Philippines has 40 days of oil left. And so 20 ships are now passed through the strait in a day. It's progress. And, I kind of go back and forth. Like, I'm sure the market will, the stock market will sell off and bonds will rise as soon as we send in ground troops, which I can't imagine us not doing it, no matter what goes on in the negotiations. But that's actually a sign of certainty that the end is getting closer for us to go to that level and secure Carg Island or those other islands in there, and not having a fanatical, extreme religious, zealot leadership control the world's economy. I mean, you just cannot give anyone that kind of leverage. You just can't. So now we're already in there. So I'm just speaking. I'm not saying whether we should have or shouldn't. I'm not getting political. So now that we're in there, like, let's just end this thing. And so I see the Trump administration trying to form a coalition with other nations, I guess, to share the liability in case there are lawsuits for knocking out their power and whatever else we're about to knock out or have already knocked out. I mean, this will all be in the courts and stuff. So, but I actually think that, if the troops go in there and secure that island and the news comes back that it's, a Venezuela-style operation or a, quick operation degrading the capabilities to put a stranglehold on the world's economy by that Iranian regime, I actually think that would be friendly for stock markets and bonds. And so, I follow Tom Lee from Fundstrat, and they say a lot of times markets will bottom before the resolution is actually over. And I don't know if that started today. I'm not saying it has, but for those of us that invest or want to invest, or if you've never invested, take out a paper account and trade with fake money. There's some great businesses that are not impacted by this at all, and they are on sale. I mean, like, you haven't seen an opportunity like this since April. I mean, where people literally are making game-changing wealth. By the way, Fannie and Freddie stock both popped 50% today. Bill Ackman and Roaring Kitty came out. This is Michael Burry, famed Big Short investor. I mean, they came out and said these are just generational opportunities for Fannie and Freddie stock, saying that they could 10x up to $40. I don't know if it's just a pump and dump, but stocks went up 50% today. So, I mean, 50%, if you put out, 100,000, 10,000, I mean, that's real money to pay for your gas. So, pay attention. There's like literally multi-generational wealth opportunities in the stock market. I do think the 10-year Treasury, it showed that it wants to come down. It's gone up pretty fast. Could it get to 460? It's possible. 420, the Elon line, is looking, ironically, over oil. Who announced they're getting closer to the SpaceX initial public offering, which is a big deal. Maybe go out at a $1.75 trillion valuation. That's huge. The Elon line, if you look technically, I love looking at MBS Highway and all their charts. That 420 line is looking like if the 10-year Treasury retraces back, it could maybe take a little pause there until things get a little bit more calm. And then we see the lasting effects of this now wave of inflation that will hit us with oil passing through the system. As Louis Navellier mentioned, it is an inflation bubble that has to work its way through the system. So it's not nothing at this point. However, business is up. It's spring purchase season. Locks are up in all three channels. We're having a great funding month. I know a lot of lenders are. And next month it's going to be better. And so when rates come down, and they will, because the trend is your friend, that's going to be just more business and the headwind will subside and the tailwind will kick in, and calm winds never made a skilled sailor. So we're looking out for that. So I think with Jobs Week, if the economy shows weakness on the jobs report Friday, in a shortened trading day for Good Friday, we could actually see even more reprieve from the 10-year Treasury if there's weakening in the economy because of labor. And, having said that, Elliot Eisenberg put out a great talking point. I talk about worker productivity, which is really boosting our GDP. Worker hours grew, 1.95% a year from 2010 to 22. And that was about 83% of GDP growth, just worker productivity, just workers working longer hours. I know we're all working longer hours right now. It is really busy in our business. From 23 to 25, the hours worked increased an average of just 0.23%. So extra hours boosted GDP by less than 10%. But rising labor productivity was responsible for over 90%. That's deflationary. And, just wait for AI's impact. You saw my video last week. So there's a lot going on that's positive. JOLTS report, job opening and labor turnover report comes out tomorrow. That's always a big one. We'll see how that's looking. And I got Kurt Loomis has a great email he puts out. And today he said that, 4 homes are being sold by institutional investors out of every one that they buy. So they're selling more right now. That's actually, a good thing. So they're not gobbling up homes and keeping, families from buying as much. They're providing more supply for families to buy. So if rates come down, affordability gets a little bit better. I know that's tough. It's different, definitely market specific. By the way, the rate hike thing, the odds of a rate hike, according to the CME watch tool for FedWatch, which is usually like a hedging tool, just like oil futures is a hedging tool, not the actual thing that's going on. Rate hike was priced into up like 8.3%. Now it's back down to 2% because the Fed, Chair Powell, went to some Harvard classroom today and reiterated his stance on oil shock and what's going on and said, we don't think this is materially going to impact inflation. So, take that with a grain of salt, but the markets liked it. Stock market did okay. And there could still be one more flush out, with anyone that's over leveraged. If we haven't quite found the bottom, you can always leg into positions. Take that $100 like we were talking about, buy 25, then 25 and 25, buy 33. Like you can leg into it and kind of cost average down if the market's still going down, rather than just taking whatever money you put in the stock market and plow it all in. And then if it gets worse, you're going to be like, KP, you told me, but I'm not a financial advisor. I told you that too. So again, I think there's a lot of opportunity out there. We're just a quarter through the year. Spring is sprung. Happy Easter. And I'll get back to you on Thursday from Napa on the Customer Advisory Board with Zactus. Have a good one. Cheers.
Hey, it's KP coming to you live from Napa. Is that Kobe? That's Kobe. We're going to be on at 10 a.m. You ready?
What are we doing?
We're live.
Oh, we're live. Oh.
We got Alex McDonald. We got Dana. We are wrapping up the Zactus Customer Advisory Board. And Kobe lives 10 minutes away in Sonoma. Local. Let's go. We're doing it right now. Say hi, everybody.
What's up, guys?
It's happening.
Are we doing a live video?
Yeah, live
we are
video.
live. We are live.
Oh, God.
This
Hello.
is one of the guys behind the scenes, Eric Rocket. All right, we'll see you all over there.
Did you say Crockett?
Yeah, Crockett. Eric from Crockett.
See you there.
All right, we had a great discussion. I mean, obviously, like data and AI and what everyone's working on and where verifications and credit and all that data is going. And, I think the energy is positive. And this is, I know people are negative because there's been some volatility in the market, but there's only been 5 weeks of volatility. And I put out a video Monday night saying we could have found the bottom, and we might. I mean, it looks like Iran and Oman are coming to some kind of agreement, and the administration is trying to do something with scaling back. I mean, I know they're still taking strategic strikes, but they're not. It's the military operation is largely over. So whether they do ground troops or not, I don't know. The U.S. is energy independent. And so I'm going to talk about oil and the economy in a second, but let's talk about mortgage rates. The trend has been shown. The market wants to go down. We've had an intraday high of the 10-year Treasury at 4.48, but never closed. I think about 4.44 or maybe 4.42 on an actual close. And we've seen intradays in the high 420s. So we know what the market wants to do. It has told us. We've seen the stock market rally. I'm not a financial advisor. I'm not responsible for your losses, only profits. We've seen the playbook. We've seen where money has tried to jump ahead of this in case it is the bottom, because it's like catching a falling knife. Great expression. We've seen some great stocks that are good businesses that are on sale, as I mentioned on my Monday video. And so we know what the market wants to do. The playbook is there. So fear not. We're going to get through this, and the trend will continue. The trend has been for years lower inflation and lower rates. And so that's where we're going. And we're in the heart of spring purchase season. Is now Q2. April has started. Hopefully all the April Fool's jokes were fantastic yesterday. We launched a rocket, Artemis 2, to go around the moon. There's a lot going on. It's a great big country. So, this country can survive $100 West Texas Intermediate crude. It can survive it. Adjusted for inflation, the prices, even at 125, has been the average price per barrel adjusted for inflation, which is higher, which is not a good thing. 125 is where we would be at for the 25-year average for the price of oil. So we can survive $100 oil if that's where we're going to peak out at. And we were just at low 60s, mid 60s not too long ago. If oil scales back, the stock market will rip, and then money will flow back into bonds, and rates will get better. And so just as quickly as everything went up, it can just as quickly go back down, or even quicker, because the trend is the larger force. So now, natural gas is interesting. That's what's powering the data centers, and there's something called the Golden Pass. So check out the Golden Pass in Texas. It is a massive, basically liquefied natural gas station, and Oman and Exxon Mobil. It's Exxon, maybe it's Chevron. I know it's Exxon. Oman has 70% ownership in the Golden Pass, and I think 30% is Exxon. And so, for 5 years, Oman has had, because of Iran launching a missile at the natural gas facilities in Oman, has taken out about 17% of the world's natural gas, and that puts the U.S. in a good position. So, if oil is higher and we're still at war, these are all bumps for our GDP. It doesn't help us, as consumers. Like, none of us own an oil or gas company, but it is good for the economy. It's good for not going into a recession, which in our business, if we do go into a recession or stagflation or whatever, is typically good for mortgage rates. But there's been no dislocation in the financial markets. There's been no liquidity crisis, and I got to give the Fed some credit with Chair Powell at the hand. He's been a very steady hand looking through this event, looking through tariffs, as you should too. And so we'll all just keep grinding, and spring purchase season is going to be fantastic. And our country is the greatest economy in the world. I know we have $38 trillion in debt, and we're not perfect, and we don't always do everything perfectly, and there's a chaos factor out there. But spring purchase season is absolutely fantastic. I'm talking to all these lenders here who are having incredible months. Like March was incredible for a lot of these lenders out here, and I know a lot of companies out there feel the same. So don't buy into the negativity. Don't believe the hype. Keep grinding. People want a roof over their head. 7Ds, deployment. Thank God for our troops who put on the line. Deployment, diamonds, diapers, divorce, debt, downsizing, and death. It is, people are going to pay the rate for a purchase business, and they'll refinance 6 payments later, so you don't have an EPO. Have a wonderful week. We have our podcast with Crispin Commentary. Thank you to Zach just for hosting this incredible session, and we'll see you back on Monday. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.